Saturday, the 7th of December 2024, weekly price action review. I'm going to have a look at the NQ today, specifically look into the importance of monthly, weekly, daily order flow, and cover the weekly profile we have seen unfolding last week, which was Monday low of week. Alright, the monthly chart, that's where we start off with. You can see, of course, that the market has been a very long-term bullish order flow, so the protocol is then the same. We don't try to pick it up and continuously look to justify buy setups and reasons to move higher. Specifically going into this portion of price action here, this is where I really framed off my bullish stance, which I held really since this trading back into this monthly fair value gap, because what specifically occurs here is that price initially trades back down into this fair value gap, moves way higher. Then we saw some consolidation here. I can remember it like it was yesterday. The market then drops down, reclaims that monthly fair value gap, and a SMT divergence takes place between NQ and ES at a key level where you expect really the market to turn from, since order flow has been really bullish long term. So when it then trades down into a discount array, you really just anticipate the market to find support there and continue to trade higher. So when the market did this, when the divergence took place between ES and NQ at that key level, the market rejected off that fair value gap. We can then look for old highs to be targeted next on the basis of internal range to external range liquidity, since the market moves from internal to external range liquidity and from external to internal range liquidity. In this case, the market dropped down into internal range liquidity, showed its the algorithm showed its hand. It wants to reprice higher. So then I immediately look for this monthly external range liquidity pool, which was the all-time high at the time, and that was then my target all throughout this 3 months. But not just those 3 months. It's not like when price took out that monthly external range liquidity draw that you immediately start to look for sell setups. No, you stick with the idea of you stick the side with the monthly, weekly, daily order flow, which was bullish. So when that is the case, you don't expect it to poke its head above it like here and then immediately start to reprice lower. No, when it trades above the old high, you recently anticipate some measure of retracement, but then just to set a stage for another leg higher to really trade through that old high and just create new all-time highs. So that was like the whole narrative I had for this month of December, to just continue that move higher that was really set up by this candle here all the way back in the summer. So dropping down to the weekly chart with that narrative in mind that we have on the monthly. So the monthly stance is bullish, and we then just what's the right word in English? That just flows over into the weekly chart. So you can see here that formation that we saw on the monthly, but specifically just looking into the last week's trading, since really the importance is here, since I trade intraday. So of course it provides narrative, but the most important part is just very simply, is the weekly range going to expand higher or lower? That's really the most important thing here on the weekly chart. And to derive at that, you have to look at some past price action, but you don't really have to go too far. And if you're just going to be trading intraday and just look for like scalps and intraday trades or short-term trades. But the market traded down into this bullish order block, which was nested inside of this inverse value gap. So that already gave the indication that we're likely going to see a continuation higher inside of that higher time frame bullish order flow. And as price did not take out that old higher, so we have the same phenomenon take place here. Internal range liquidity, which on board bullish order block is internal range liquidity. We can then anticipate the market to expand towards external range liquidity, which comes in form of this old high. So that was like my main draw on liquidity, just the market to create a new all-time high. And we have seen that level being traded to pretty early in the week already on Wednesday. Although I didn't trade first day of NFP week, I continue to look for continuation higher because of that same phenomenon I outlined on the monthly. You don't expect the market to just poke its head above an old high and then reject and just start to reprice lower. Nay, you expect it to poke its head above it, then perhaps some retracement into the day, or just continue going higher and really expand higher to take out well, it's clearly seen in the daily, but all the open float resting above those old daily highs and weekly highs. So really the reason, simply put, for my bullish stance this week was, well, of course the monthly daily bullish order flow, but the internal range to external range logic that was from moving from this bullish order block to this old high. Alright, daily chart, very much more refined. The most important aspect of this was the expansion higher, then the retracement to a discount. So we have again the same phenomenon take place here, moving from internal range liquidity to external range liquidity. There was really a beautiful price action, area of price action. Although we see some consolidation here, back and forth, we stick to side with the higher time from order flow and the expectation for price to expand higher. So although at the time, right after elections, this looks on the surface that really wants to break down, and it could have, of course, but you just continue to side because you have these relative equal lows here, like a really obvious level of liquidity, but you still continue to side with the higher prices, and that's what I did. So the market dropped down on Monday into this propulsion block. Why is this a propulsion block? Notice that the market traded down here into this order block here, very obvious bullish order block, two large down close candles. I like to refer to them like the most obvious ones. And it's also the lowest one here, this down close candle, so you wouldn't refer to this one or this one if you ever thought about it. So it traded down into it here, so an order block that trades into a order block is a propulsion block. So the market drops down here into on Monday directly in the opening to the opening of this propulsion block, and then immediately starts to reprice higher and eventually taking out the weekly external range draw here, which is price at liquidity pool and all-time high. And then we are at new all-time highs, and then I just refer back to standard deviations and over projections to the upside. And the most obvious one for me was this breaker standard deviation. So I did projections based on that. We see that minus 1.5 got hit here, I've got traded to, and it's now moving towards that minus 2 standard deviation, which might be something for next week, since we traded down on Friday into this fair value gap and just immediately starts to reprice higher institutional order for entry drill, and we can just continue to look for higher prices next week. So yeah, I think that's, oh yeah, I like this one, this little detail when price dropped down into this wick and then starts to reprice higher afterwards. But outside of that, we just drop down now into the 1 hour weekly profile and have a look specifically at this week's trading. So we have here the 1 hour chart with the weekly profile of the daily delineations here. Monday of the week was the profile, and that was all reframed on the basis of price dropping down into this bullish propulsion block and showed that expansion higher. When that was the case, I was already looking for a Monday or Tuesday low of the week, but when price starts to reprice higher, then I decided with a Monday low of the week, and then Tuesday to be a retracement down into a discount array that was created on Monday, the textbook scenario. Normally you would look for like a discount retracement into optimal trade entry on Tuesday, so Monday's range, and then Tuesday dropping down into optimal trade entry on the basis of Monday's range, and then continue higher in a Monday low of week profile. But because of the extreme bullish order flow, I would just really look for not that deep of a retracement, especially with the weekly external range draw above. So we only saw this drop down and then just really spooling higher. Notice all these small candles just spooling price higher towards new highs. This week was NFP week, so when that is the case, I really want to focus on trading on Monday and Tuesday and up to Wednesday New York session. But specifically Monday is like really the highest probability trading day in most NFP weeks. Like sometimes when you have like a bank holiday, that's of course a exception, but normally that's the highest probability trading day of such week. And that was the case this week too, as we have like a very nice expansion higher, almost right from the open at the midnight open on Monday. We saw initially the market to drop down into this fair value gap Sunday and overnight on Monday, and then we saw that expansion higher above the small new week opening gap of this week, and then just really leaving it. And as I outlined here, the market expanded above the new week opening gap and left it behind with large consecutive up-close candles. And it was another good indication that we would see a trending week, since in trending weeks the market doesn't spend a lot of time inside of in and around the current new week opening gap and just leaves it and really never comes back down to it, which was what we saw this week too. So the market then drops down into that fair value gap, really on the basis of institutional order for entry drill, leaving the majority of the gap open, which is going to act as a breakaway gap to accelerate price higher. We see it here, spooling higher, taking out that draw on liquidity, and we then saw some continuation higher, since you don't really anticipate it just to poke its head above it and really reverse in such a bullish order flow. It could have made a more significant retracement, but it just spooled higher. And honestly, my week was pretty much done here after that. Draw was taken and some continuation followed to take out open float resting above that all-time high, especially in weeks such as NFP, where we have then Thursday, which I don't trade, and this week was really clear. What is the right word? But really proves why you want to tend to avoid that first day of new non-farm payroll. It was just consolidating and overall something you want to study but don't actively engage in. We did have this thing here. The first step will go to this SMT that takes place between ES and Q on the basis of fair value gaps, which was very interesting. IST talked about it, and mentioned it a couple of times in I think one of its older lectures, but you can also have a divergence with gaps. So in this case, NQ did not trade down into its fair value gap, whereas I can show you here ES did trade it down into its fair value gap, so that's also SMT. You can see the significance here of the news saying then price higher, the divergence taking place at the news release. The market then expands higher. We see that the consolidation which is really anticipated after the market takes out a significant level of buy side and already showed like expansion above it, then at some point it's going to consolidate, especially in very bullish order flow. It's more likely to just consolidate and pause and have some major reversal, which is basically what it does here. It just pauses and really waits for non-farm payroll on Friday. We do have this, like initially buy side get taken, then the market drops down, takes out sell side, and this is like already setting up the stage for a non-farm payroll expansion higher and just a continuation all throughout the week. So this was also why I didn't really trusted this as like the high. I was overall conflicted as I outlined it in my aftermarket analysis of Friday. I was a bit overthinking here, but the market then diverged at the lows of SMT VS at a bullish order block, and we then saw the expansion higher to take out first day high and really close, very close near its high, which is typical for such a trending week, for the market to just close very close near its high and not see TGF retracement, etc. But it was like classic market mechanic when the market takes out first buy side, then sell side, and then you see the move up higher, and in between SMT takes place. So buy side, then sell side, SMT, and then the lower resistance, the greater and higher, because that's what it does to at least this high. And because of the whole bullish stance, we expected to retrade through this high and create some high based on time of day, which is what it did to create the high in the PM session here, or lunch, one of the two. So yeah, that's really going to be it. That's a very insightful trading week. I want to outline one more thing, was that this, you should ignore this. This are like faulty mistakes I made here, but it's like an old new wick opening gap. The market initially found resistance at this. Notice how the bodies did not manage to close above consequent encroachment. Then once the bodies closed above consequent encroachment, after it traded down at this fair value gap, it showed a rejection of it, and then the close above consequent encroachment, then you saw the market expand above it, trade above it, and then the market drops back down into it, bodies closing above it, and then really the expansion takes place and it just pulls higher to take out the buy side liquidity draw. So that's really going to be it. Yeah. I will perhaps do tomorrow a weekly forecast, although it will be pretty basic since I just continue to scout for high prices, but we'll see. Oh, one more thing actually. I forgot about this. There was a pretty significant decoupling taking place between the indices this week, which was very clearly seen here on these screenshots. You could see that Dow was just actually moving lower this week. ES was more consolidating, moving higher, and whereas NQ was really the obvious strength to the upside. And the reason for this was that I think was that NQ did not take out its all-time high yet, whereas Dow and ES already took its all-time high a while ago and is now trading at all-time highs. So that was, I think, the reason why we saw such a more pronounced move to the upside, as it was really like ES and IM were just waiting for NQ to take out its all-time high, and that's really what we saw take place this week, and which I elected to trade NQ, which I always do, but now more specifically because of that reason I outlined. So there was this, again, some low probability moments this week because of the decoupling taking place, which was, yeah, a good study, but you have to be careful as it's more likely to be high resistance in nature, etc. So this is really going to be it.